The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. Welcome to the Tuesday webinar, Trade of the Week, courtesy of Trade Ideas. Myself, Steve Gomez, user 3, is going to kick off the webinar, and I'm joined with my good longtime friend, business partner, and trading whiz, Andy. How are you?
Hey, Steve. How's it going? Doing good.
Doing good. So we're just getting started here. What I want to do before we get started on the major webcast, some of you are familiar with the polls. I want to run a quick poll just to kind of see who's in the audience and what's going on. At the same time, I will call your attention to the handouts panel, which is down there on the handouts window. You can open that up and you'll see a Trade of the Week, September 2017 PDF. What's going to be in there is promo codes and some of the other things that we're going to show at the end, some of the slides. So if we go too quick, you can always revert back to that. Again, the recording is going, so if you're late or early to leave the webinar, you can always pick up the replay on our YouTube channel in a couple hours after we finish. So let me get started with the polls here real quick. It's the same old poll that we always talk about. Let me check the first one. The first one is, are you a Trade Ideas subscriber? Binary question. All right, yes or no, I'm a Trade Ideas subscriber, or no, I'm just in here because I've heard such cool things about your product and I just had to come see for myself what this is all about. And we'll wait for a quorum, which is achieved here pretty quickly. As far as the Senate's concerned, we're at a quorum and then some. So let's go ahead and close the poll and share that out with people so they can see. Can you see the polls?
I can.
Okay, good. So it's about half and half today. Interesting. Half have subscriptions, the other half do not. Quickly moving to the second poll, and this one is directed only to the current Trade Ideas subscribers. So if you are a current Trade Ideas subscriber, by another binary question, are you on the AI odds maker premium account, or are you using the regular standard TI Pro, which does not include AI, backtesting, or price alerts? And again, we typically get kind of the same sample, and I see it coming in here pretty quickly. I'll give you guys another 15 seconds for voting so we can get to a quorum. I realize this sample is less. But let's go ahead and close that. And once again, very, very similar to what we typically see. So I'm going to close that poll and share it. Basically, of the people who do use Trade Ideas, a good 2/3 to 3/4 of you all are using the premium service, which is wonderful. A lot of people do start off using the standard version, get familiar with it, and then take it to the next level and go from there. So not surprising, but good to know we've got a lot of premium users in here today. All right, so let me hide that poll, Andy. And we should be seeing my screen now. Trade of the Week, is that what we got?
Yes, we are.
All right. Howdy, David Schultz. I assume the screen is visible and my audio is presentable as well as Andy's. So I'll go ahead and use that comment from you, David. If anybody else wants to chime in and let me know that we're visible and audible, that'd be great. So let's get into it. September 19th. This is the Tuesday webinar focused primarily on the Trade of the Week, which comes out every Monday morning on your emails for those who have subscribed. That's the main theme, but we'll touch on some other themes going forward. And of course, to make the lawyers happy, the old disclaimer page. You know, if I could read like those guys do on the radio where they got 15 minutes to get all the... I would do that, but I can't. Trade Ideas is not to be considered investment advice. We are a content publishing company, software as a service subscription. We are not registered brokers. We're not financial advisors. If you guys are looking for some ideas on how to manage your personal finances, well, you got to go talk to the guys that studied hard and took the fiduciary responsibility tests, and they have the brokerage licenses or the RAI specialists, and they're happy to collect a 1 or 2% fee from you based on who they are. All right. Let's see. Yeah, Bill, hang on to that question.
We'll looking for the PDF or?
I was hoping you could send me the link to the YouTube for the advanced scan set. It's probably the PDF because we don't record the Friday sessions, Bill. So either Andy could drop that in the chat, or if it doesn't work, info@trade-ideas.com will get you that PDF. Which brings up a good point. We'll talk about that in a second, as soon as I finish up reminding you guys that anything you see or hear should not be construed as financial advice. We're just a couple of goofy traders that want to show off some really cool technology that we've been using for almost 18, 17 years now. All right, next slide. You're never alone with trade ideas. Joining the trading room is free, and you do not need to have a subscription to do that. Every day during market hours, Barry Anderson manages and moderates the room, opens up his desktop to you all, shows you the trade ideas, scans, and technology that he's using, and shares his trades, his entries, and his exits with you. Additionally, there's a few hundred people in there that are pretty good. A lot of them are lurkers, but there's a handful of really good traders in there that do contribute to some additional ideas as well. So free is a great price. I've heard a lot of people tell me they pay a lot of money for other trading rooms, and it still doesn't compare to our free trading room based on the integrity and the honesty and everything that you guys are seeing there. So step number one, we help ingrain and onboard the new user with the live trading room. Even if you're not a new user, please feel free to stop by and start to get a feel for the jump rope and how it's working. You're also not alone because we have 4 webinars every week, Monday, Tuesday, Wednesday, Thursday. They're always at 5 p.m. Eastern, 2 p.m. Pacific. Always a little bit of a different theme. Yesterday I helped out in Jamie's room. Today is my day with Trade of the Week. Tomorrow is questions and answers demo. It's where Dan, the CEO, and Brad, the COO, start unleashing and teasing some new features, tools, updates, new versions, things coming down the pike, etc. Tomorrow, typically we have the trading studio, but I do believe it's canceled tomorrow. Is that correct?
It is.
Yeah.
No, well, not tomorrow, the Thursday one.
Thursday, excuse me. Yeah. So the trading studio, the Thursday trading studio, is not going to be a regular session this week. And typically when that happens, we're substituting it with a webinar from another group. So if you're real curious and you're jonesing and itching for a webinar on Thursdays, go ahead and email info@trade-ideas.com and ask who's the guest speaker that day, and we can get you on that email list. It's a separate email list, so it's kind of one step removed, but that will return the following Thursday with Andy taking charge and Jamie helping out as well. And then, as mentioned earlier in Bill's comment, he was referencing the Friday support session. So basically, we've cleared our slates on Friday mornings for one-on-one sessions, and all 3 of us, Jamie, Andy, and myself, come in and open up the forum for 3 hours, 11 a.m. to 2 p.m. Eastern, and there's no agenda. It's come one, come all, first come, first serve, ask a question, get it answered. You want to look at a chart, we'll look at a chart. You want to help help building a scanner, we'll help you build the scanner. So 3 hours of anything goes. Had nothing but great feedback and comment from that. Great way to end the week on Fridays. Typically, it's a slow day. And then I would be remiss if I didn't say, once again, as I made allusion to, we're doing one-on-one trading hour, one-on-one instruction hours, okay, with people. So all you got to do is sign up. If you're a user who's thinking about signing up, stay tuned. I've got a promo code at the end of the slideshow to give out and honor 15% for somebody who wants to try out their first month or even a first year, and that promo code will be forthcoming. But what you're getting with that not only is 1 month and 15% off, you get the ability to immediately turn around and go into our scheduling system and schedule an hour that works during market hours, I might add, between myself, Jamie, and Andy, whichever session is the most convenient for you. Typically, there's about a 8 to 12 day wait, but that's a good thing. It gives you a chance to get in there and get your feet wet and hands dirty and generate some questions and get some ideas. So you're super ready for your one-on-one session. And that in itself, guys, is a $99 value. If you ever wanted to come back after your free session and do another 1 hour session, it's a $99 value. So consider that when you're signing up for your first month. You're getting 15% off of $99, which is the standard rate, and then you're getting a $99 value free one-on-one session focused only towards you. So in 30 days, most of you people really know where you are in relation to this product and if you want to take it to the next level or not. All right, thanks for indulging me on that slide, because that slide always works into this slide, which just shows the parabolic growth of our net subscribers. It's not growth, this is net. These are people who are staying with us. And it's been parabolic basically since I joined. I'm not going to make a correlation there, but the AI was also introduced in January, the same month, 2016. Had a nice parabolic move, and then Andy joined right around here. And Sean McLaughlin is our newest member. He's from StockTwits, very knowledgeable trader and social media guy, blogger. He gets it, customer support, wears many hats. He has now joined us as well. So we're having to stay ahead of the curve to keep the support staff on point so we can accommodate all of the new users and subscribers, which we, again, thank you so much for. So everything I mentioned in the prior slide pretty much has to do with this slide right here, and move forward. Real quick, Brokerage Plus, something you guys have probably heard a lot about, but again, it's still in beta, and it's going to stay in beta until it's gotten itself right. We're closing in on a production version. It may still be a month or 2 months away, but if you're using Premium, you have the ability to tap into trade ideas if you have an account with Interactive Brokers. Now, I must preface this by saying this is not a beginner's tool. You need to first learn what's going on in the market, what you know to be a good method for trading, what you like, what your risk tolerance is, and what you're looking for. And then you have to come up with your own scans to trade them. The AI backtested Holly trades are not plugged into this tool, but for somebody who's an intermediate to an advanced user, it's a great tool to automate things, and there's a lot of new traders embracing this technology. We're going to talk about our end of the month event, and we're going to have one of the traders. His name is Michael Noss. He is at BONPARA at Bonpara on Twitter. And he's doing a lot of content talking about how he's using his robot and setting it up, and how he's having good days, and the bad days are very few and far between, but the risk management is helping him. Great guy to follow. So once again, Brokerage Plus will be a tool available at some point. If you're grandfathered in now, you're good to go. If you come down the road a year from now and you really fall in love with this and you sign up, well, it'll probably be an additional lifetime licensing fee for that. So if any questions, again, info@trade-ideas.com, or there's a webpage at trade-ideas.com/download to give you guys more information on Brokerage Plus. But again, I cannot emphasize enough, this is a late intermediate to advanced tool. Got to know what you're doing with this thing. Man and machine combined, this is again going to be the theme of our October 1st Trade by the Sea 2017 event the Trade Ideas is hosting in Carlsbad. Seats are filling up. We'll have more information on that probably later in the session, and of course on Twitter. But I really want to just harp once again, man and machine combined. That's what Trade Ideas is offering. Trade Ideas is offering the intelligent machine, but in the best hands, it's still being used by a human to curate the possible discretionary setups and trades. So this is a great quote from Paul Tudor Jones, one of the great living traders of our time right now, who's rather reclusive, doesn't give a lot of interviews. But he was recently quoted as saying, "No man is better than a machine. However, no machine is better than a man with a machine," and that's the operative word, man with a machine. So Trade Ideas is the machine. We're going to try and do a little bit of the human component, man, woman, person, human, trader, what have you, and keep that theme going into the end of the month. All right, agenda for today, September 9th, market recap, path of least resistance, kind of the theme of the day that I'll show you and demonstrate visually. The Holly AI had a really good day on many different metrics, and we will talk about that as we get to that portion. Trade of the week recaps. Well, we still have 3 or 4 trade of the weeks that are technically open, so I'm happy to revisit those and maybe even take questions if somebody's got one, including the one that started this week. We'll get to that one. And then Andy and I are going to blindly take a sector glance. I say blindly because we have not looked at the sectors yet in a whole the way we're going to do it all together. So we'll go ahead and look at the sectors all together, and the idea behind that, guys, is to get a chance favors the prepared mind for tomorrow. So if we can identify a couple of nice looking sector charts and create a short list on our notepad if we see stocks coming through tomorrow through alerts or through Holly, and we can associate those with the sector that we found that looks ready to go, just gives us more confidence. And you guys, there is never a shortage of confidence desired in trading. The more confidence we can have, the better, whether it's volume or short squeeze potentials or sectors or using the Holly AI strategies that have back tested well. We're trying to simplify this game for everybody. And then lastly, we'll maybe take 2 or 3 or 4, depending upon how much time we have. We'll look at a couple of charts. That's always fun, but save those chart requests towards the end for when we ask for them. And if you would, let us know if you're in it, if you're thinking about it, if you're in it long, if you're in it short, anything you want to feel that you'd like to share with us gives us the ability to give you guys a better response. All right. Okay, that's that for the slideshow. Let's get into the product, which I need to launch. All right, welcome to my desktop. This is my layout. This is my default layout. For those of you that don't know, when you go to leave the program, it says, do you want to save layout? Well, if I click yes, it's going to save my default layout, because the next time I open up Trade Ideas, it's going to open up to my default layout. One of the things you probably don't want to do is go to a channel, leave your default layout, then leave the program, and then say, yes, save as my layout, because the next time you guys come back in, your channel bar is going to be your default layout, and you're going to wonder where the heck it went. So I might as well just follow up on that. One good thing you all can do is make a backup copy of your layout in the cloud in case you ever lose a copy, you get a corrupt hard drive, or you want to load this on a machine 100 miles away. Go to File, Save to Cloud, and you will notice that our cloud has this button called Entire Layout. Basically titles it Layout. I can even add a date to it if I want. I'll go ahead and update it. September 19th. All the boxes are checked. Layout, September 19th. Done. Good to go. I no longer have to worry about losing every single setting that I have current in today's layout. Isn't saving a backup layout automatically now? Yes and no, David. The layouts are automatically being saved in your hard drive. Watch this. Save layout. You see these folders up here, backups? Yeah, this is what you're referring to, David. So you're correct. We are saving backups to the local machine, but if a hard drive crashed, hopefully that would never happen to anybody, because that's no fun. This is not going to work for you. What's going to work for you is using that cloud, that extra step we took by backing up to the cloud. Good. Okay. All right. So let's get started here. Market recap is what we like to start with. Looking at the SPYs. And again, I'm going to save my 2 and 3 weeks ago sermon on how I was looking at the chart patterns, not news, not fundamentals, not Bob Pisani, not Dennis Gartman. I was focusing on some alarming signs that have since cleared up as we see the prices bounced back up, back above this long-term trend line, and we are just flirting around here again with new all-time highs. We made a new all-time high last week, but this is the S&P. This is why I mentioned on the slide earlier, market recap, path of least resistance. And that's why I mentioned last week and yesterday 2 of the strongest virtues as a trader that you can have. One is having an open mind, which allowed me to look down here when I was about as bearish as I could be and just say, you know what? If we can't follow through here and we bounce back up into this range, I'm going to flip my hat back around so quick to the bullish camp or the neutral to bullish where the path of least resistance remains up. And I did. Did it publicly, did it with you guys, and so that's an example of how we have to be able to turn our emotions and our convictions on a dime. If you don't, you're just going to argue the same side of the market, until you're insolvent. The market doesn't care about your opinions or your positions. The market is right, and the only thing that pays is price, and the price is moving back up higher. Spider's path of least resistance now looks completely to the upside. All right, no reason to be bearish here. Qs, what'd they do? They had a hard time yesterday. Yeah, they stayed in their range today. So I think what I'm going to do is I'm just going to go ahead and set a price alert. QQQ, new highs. Bam, that's all I had to do. That blue line is now an active price alert, and it's letting me know that if the price trades above that alert on the Qs, it's going to come up and splash on my screen in real time, so I know that the Qs, NASDAQ, might be starting to take some leadership.
And just real
Go ahead.
quickly, Steve, just for you to catch your breath, what he just did, guys. I mean, you should be doing that all throughout the day. Maybe especially if you have premium, you get unlimited price alerts. I mean, you could be doing this 10 to 20, 30 times a day, and just because you see the breakouts, you see the areas of interest in the chart. There's no reason not to take 3 seconds, whatever, and just go ahead and put an alert in some of these stocks that you're going throughout the day. It's very powerful. I've used probably, and Steve has as well, probably 8 different trading platforms. I've never seen a more user-friendly price alerts than these. They're so.
Yeah, when I talk to new traders on my one-on-one sessions, I implore them more than once to please force yourself to use this tool, which is part of the premium package at the price alerts. And as you guys saw, I set it directly from my chart. But I'm imploring new traders, especially new traders who are still trying to find their way. They go into some of these warrior trader rooms or other fast-paced rooms, and their head is spinning. And so what I'm telling them is this is a great teaching device. Not only can it be a great paper trading tool if you don't have a live account, but it forces you. I'm imploring them to set a half a dozen of these things every day and then let them trigger. So these are the ones that I've set down here that are not working yet. The bottom one is probably that Qs. There it is, QQQ new high. So still waiting for these to trigger. And again, it's part of the method that I like. Set it and forget it. Don't fret over it. Just know why you like it. Put your story in there, put your notes in there, and let it go. But the other thing that it can do for newer traders is it can say, hey, how are the profit and losses moving after we're triggered? Well, I've sorted by profit and loss. This is a pretty good sheet. I need to clear this out. This is probably about 3 or 4 weeks old. But look at what's working, guys. It's working. The word squeeze play works. All right, there's our trade of the week. We'll talk about that. Squeeze play, 52-week high. Spiders, that's just a placeholder. Washout bounce. Squeeze, 51% short. SMHs, I'm monitoring that semiconductor list. But trend change lubricant, 63%, 52-week highs. Okay, so what's the common theme here? High short float squeeze plays and a lot of 52-week highs. That's what's generating alpha based on the alerts that were set. Well, on the flip side, what's not working? Down here in this area. Well, the first thing I notice, 1, 2, 3, 4 shorts. Well, shorts aren't certainly working these days. That's not certainly helping. And a lot of other stuff on here that just didn't pan out. But for the most part, I can see what's working and what's not. So just a quick detour there. I can't express enough how important it is to look at this chart like I just did with you guys in real time and said, oh, wow, hey, if the Qs get back above this level, I want to know about it. Well, if you want to know about it, set it and forget it. Now, for those of you who don't have premium, I know you got a brokerage account, which means you probably got an alert and a symbol alert that you can set at TD Ameritrade or eSignal or what have you. So you don't have to have the full-on trade ideas, price alert, profit and loss, but you can still alert yourself to things that you want to see. Okay, so there's the Qs. IWM, I talked a little bit about this yesterday in Jamie's show. Has bounced very significantly off of the year-long support that IWM has had, which, by the way, is the Russell 2000, which focuses on low-cap stocks, your under 10, under $5 stocks for the most part. Really nice bounce off lows. Here's your consolidation, build a higher low base camp, and then assault back towards the peak again. But we're running right smack into further resistance, prior resistance, I should say. So ideally, what I would like to see is IWM maybe chop around for another day or two or three, and then if it breaks through, I want to know about it. So I'm going to set it. IWM, new highs. Now let's talk about this IWM. Actually, we'll come back to this because we'll talk about that a little bit when we get back to Holly. But this is a chance favors the prepared mind setup. If the IWM wants to take the baton and run with the market and be the new sector rotation of strength for a few days, it would be nice to know about it, because when we start seeing things coming through our alerts that are under $5 or under $10, or if Holly starts spitting out some Mighty Mouse trades or little big guy trades, which are typically under $10 or $5, well, we have a little extra knowledge and confidence. Like I said, traders need as much confidence as we can get, that if the IWM's breaking out, we might want to start paying attention to some of these new alerts that may come out in the future if they're considered small cap trades. So keep that in mind, and that's why I pull up the IWM, to see what the small cap stuff is doing. And then lastly, the diamonds. Nothing to say here except, once again, path of least resistance is up. Steve got bearish here with that wick, or I started to get bearish, and then after these two big down days of high volume, look at that volume right there on these 2 days, huge volume to the downside. Typically we call that distribution, but you never really know it's distribution until the market is corrected and you can look back in the rear view mirror and say, oh, that was distribution. So I admit it, mea culpa. I was trying to be a little bit ahead of the game and maybe be an early alerter, but I was wrong. But I quickly admitted I was wrong publicly and shifted my focus off the short side and back to the long side. So looking at this, hey, there's no argument there. The path of least resistance is definitely up in our market. All right. Anything you want to add, Mr. Lindloff?
No, you hit it very well. It was very kind of dead action today,
Yeah.
which I think that speaks a lot for how well Holly actually performed, and we'll get into that next. But and I think don't we have a Fed decision tomorrow?
I saw something about a FOMC.
Yeah, I think so.
Today's Tuesday, so well, there's really one easy way to do that, and let's do it together, shall we? All we do is go to Google. FOMC calendar 2017. I probably misspelled something. Here's the calendar. And wouldn't you know it, September 19th and 20th. Guys, tomorrow at 2 p.m. Eastern, fireworks might start up again. I don't know. Fed, don't get me started on the Fed. They had their grand plan of dot plots and how they were just going to go ahead and raise rates. But funny thing happens on the way to the market. Things change. I don't know if they're going to be able to raise rates, but that's just my 2 cents.
Yep.
We shall see. But correct, Andy. Thank you. Tomorrow there is a Fed meeting, and we'll know at 2 o'clock. And you'll see the liquidity die off. You'll see the spiders probably make a new high and a new low within the same hour until that volatility dies off. It's almost like plucking a guitar string and then just letting it settle back in. So that's the action we're going to see tomorrow at 2 p.m. Eastern, one big guitar string pluck in the spiders. So hey, real quick, I did notice I got a washout bounce today. No action on my part, but I want to show you. They don't come through very often, but when they do, they're interesting. For those of you who like to scan for hammer candles, well, take a look at this particular one. Matter of fact, this LEXEA spit up a hammer candle down here earlier, washing out the stops. And the idea behind this trade is to mitigate the volatility going forward for 3 or 4 days. So this would be a perfect swing trading strategy. As a matter of fact, it still back tests very well as a 3-day hold. But look, here's a great example. Washout bounce, stops are out, weak hands are gone, price is free to drift higher for a few days. All right. Well, we just had another one in the same stock here today. So what one could do is mark up the high end of that candle today. Price alert, washout bounce, and just leave it at that. That's all I need to know. And if I pull it up and I see the market and this particular stock tomorrow is trading higher, well, then we could have something like we had before where a 3 or 4 day nice lift comes beyond that. So I don't usually get a whole lot of returns, maybe 1 or 2 at the most on a single day, but the washout bounce did produce this one, and this one looks like it could be rather interesting. Okay, yeah, it's time to move on to the AI. AI had a pretty decent day. I'll give you a couple of my high-level observations, and then I'll turn it over to Andy because there's a couple of individual trades I think that we can learn a few things from. First observation, I'm sorting by time. This is West Coast. 7:26 is 10:26 East Coast. So our first Holly trigger did not come out until almost 1 hour into the open. So for the first hour, the AI was sitting on its hands. And we talk a lot about that here at Trade Ideas, like, whoa, no trades in Holly today. Must not be an edge. Let's all sit on our hands, except we really, really see something we like. But the AI is telling us, as we call her, the canary in the coal mine, a little sick for the first hour. Didn't have a whole lot to do. Then we had our first trades at 10:46, at 10:26 and 46 East Coast. And directional bias was paid attention to, long. So the second thing I want to point out again, once again, directional bias. Kind of like I showed you on my price alerts. Shorts just aren't working still. And that's being confirmed here again with Holly. What is the AI's directional bias? Is it long? Is it short? Is it both? And lastly, what is the trade count? Well, it takes us till the end of the day to get to the trade count, but we started off slow, and we only had 8 trades throughout the day, and we basically stopped right around the last entry was just about 12 o'clock East Coast time. We did have a little flurry here, about 4 trades at 11, 32, 33, 33, 33. And when I see a flurry of about 3 or 4 trades in a row, I pay very close attention to their directional bias. These are the 4 trades right here. 4 trades popped in within 2 minutes. When I see that and I look at the directional bias and they're all in the same direction, get ready. The market might be ready to start making a move. Well, in this case, it was a little sluggish. But in the long run, it did pull out let's see, here's right here. Here's the spiders. Here's 8:30 my time, and this is when those 4 longs quickly spit out. And if you'll see, we had a nice 1-hour drift higher. So a lot of times I try and predicate by saying what's happening under the surface in these individual names can also be transcribed into the bigger picture. What's the directional bias? What's the trade count? How long has Holly been sitting on her hands? So things like that are always very important. And I can tell you at some point in time, there may be a date where we get some 10 o'clock data, and the 10 o'clock data is just abysmal, and the market actually finally decides to pay attention to that abysmal 10 o'clock data. If you see about 3 or 4 shorts fired really quickly, pay attention. If you're long, you may want to trim your longs. If you're thinking about going short, you may want to try a couple shorts, because the directional bias that came out all at once, like I said, many times often can be an early hat tip or an early tell to the bigger direction coming in our spiders and Qs. So that's kind of it for the bigger picture today. Directional bias was long, trade count was short and sweet, but a lot of really good ones that we can take a delve into here. So you want to walk me through a couple, Andy, that you found interesting?
Yeah, absolutely, Steve. Well, first of all, it was a very dull market today. The volumes were kind of down. Just basically, you had a perfect doji in the spiders, which means it closed exactly where it opened today, which is just basically a lot of a kind of noise in between, which is very typical for a day before like a big macro news event like the Fed's FOMC meeting. But that being said, there was definitely some really good calls by Holly today, and I'm going to point out my favorite one, because I remember as soon as it went off, I sent a message to Steve saying, "Yeah," I said, "Man, I really like this one." And let's look at it as the trade was happening. And what are some of the things you see here? You see a stock hitting a multi-year high, breaking out of a range. And then you also see on the intraday a pattern that Steve really likes. It's called the horseshoe, where a stock gaps up. It really didn't gap up that much, but it's still not, it still kind of came down, retraced most of it, and then came back and went to highs. And Holly called it right before it went back through highs. Just a beautiful setup there. And when you see those kind of setups and everything marries up on the daily and the intraday, and I also say there was volume on this too as well, relative volume. So we'd have to go back in time to see it, but you can see the relative volume on the day.
Yeah, went out of 6.49 relative on the day. Exactly.
But that's what you say. That's what you call a trade with all the stars lining up, and you had some beautiful momentum on that one. Very little downdraft until the close. I do want to point out, guys, if anybody was watching this and they noticed that Holly held on to the trade a lot longer than we might have or you might have, it's because we did introduce recently, just yesterday, I believe, some new profit save parameters. And there may have been a little bit of glitch in this one, but we're going back to look at it.
Yeah.
Mm-hmm. Yeah. But yeah, you're right. But that being said, it doesn't take a genius to know, if you've had nice profits like that, that's a big percentage, basically 90 cents worth of profits. You cannot let that retrace, give back 2/3 of your profits. A good trader, would be, I see around 1280, definitely getting out of the trade once it broke down. Yeah, right there. Once it broke down below that level, yeah, you got to go. You got to cut it. But
And if you
but
didn't cut
anyway,
it there, there's
mhm.
really no reason to sit through this. This was a
No.
big 1 hour base building on the 15-minute chart midday. So this one is much more easier to see for the
Mhm.
crowd. But what Andy was looking at was just these two little red bars right here. And then once they
Mhm.
went below those two red bars, it was time for the stock to take a big breath. Um, so the point Andy's making is, yes, we've got AI, we've got Holly, and it's still a work in progress, and we're going to look into why there was not a trailing stop taken sooner. But still, it's man and machine, guys. Um, the human being has to be aware of the surroundings and be aware of price action. And a bar reversal right here, like Andy showed, would have been a perfect example to get out. If you didn't get out then you should be looking left right here and say, well, this level certainly better hold because it was holding like nothing was earlier in the day. And if it breaks that, well, then we're probably going to be looking for a full turn round trip. So
Mhm.
nonetheless, though, max profit, I'm going to highlight right here. This column is called max profit. This thing was up 89 or 90 cents, 89
Yeah.
cents at one point. Well, 89 cents on a $11 on a $12 stock, that's a pretty good percentage gain for the day on something
No
like
doubt.
that. So,
Mhm.
yeah, we all towards the end of the day were saying, okay, we've got our new logic in here for longer term uh, uh, profit saves. Basically, what we were trying to do is not allow a profit save to turn around and after 3 or 4 minutes be gone again. We've opened up the time frame to something more like 15 minutes before the price save algorithm would even kick in. But our question today to our developers was, and again, this was the first day under the new risk parameters of Holly's risk management, this profit save should have fired a little bit earlier. So we're going to try to get to the bottom of that. But once again, just to rehash it, we still have to rely on our human eyes, and we are the final decision makers of where to get in and where to get out and how to use the price action that we have to our benefit. So
Mhm.
following Holly blindly, is not always the best suit. Her best virtue and the best value are the entries. The entries. The exits are really up to us. I mean, that's why we have risk off category if you just want to get out with the AI, but we also have a risk on category, which shows what would happen if we stayed in those trades. Ironically enough, today risk on was killing it. All the histogram was up to almost $2, and then in the last 5-10 minutes, whew, big sell-off in the stocks that were open
Exactly.
on the end of the day. So hard to kind of handicap that. And so with that said, risk on was the order of the day for the whole day. But by the time we finished and the bell rang, the risk off exits that Holly took midday uh, in the aggregate total form worked out better. So, we never really know when a big end of day sell off is going to come, but it kept people in trades longer for the majority of the day. Into the last 20 minutes is when the risk on started to falter. So,
Mhm.
yeah, a great trade in ASYS on all time frames, breaking out all time high for every reason. Beautiful entry and no looking back, but it is up to us as to when we want to decide to exit these things. All right, what else can
No,
we talk
so
about?
true. Uh, well, let's see. That one to me by far stood out above the rest. Sky West was a quarterback. Was a nice little pullback there for you at 40.87. But Holly did have a beautiful exit on that one because she
Yeah.
did get out and it
Yeah.
did pull back pretty
Let's
hard.
talk about that one real quick. So once again, if
Hmm.
we go to the max profit column, there was 48 cents worth of upside generated from the entry of Holly. And I watched this one pretty closely. I was noticing as we were getting close to the time stop, I was
Yeah.
telling Andy, I'd really like to see this one book some profits because quarterback has a special spot in my heart. That's a strategy that I created and submitted to Holly. So it's like watching my boy play quarterback out there. I want him to throw touchdowns. So I was like, come on, let's end this thing. Let's end this thing because I saw kind of a topping wick here. And just as it started to get red and pull down, you can see where the dark green shade is right about there. That's where Holly deployed the time stop. So the trade ran
Mhm.
out of time. But at one point, this thing generated a really nice 85 cents worth of upside. And lastly, but not least, again, the reason we call it quarterback and the reason I love this particular scan is we're not chasing breakouts. We are using pullbacks, and maybe we're catching people who are way too focused on 1 minute time frames and they're freaking out and coughing up their shares right into our hands. So that blue line shows you that the wick actually went higher and then pulled back down right to that wick, and it looks like right to the penny was pretty much the entry point. Sometimes the quarterbacks will overshoot just a tad, but this one was pretty much right, spot on there. And then for 45 minutes to an hour, it never really looked back. And then it kind of got wishy-washy, but the best part of that trade was the first hour of that trade. And again, looking over here on the daily chart, well, we definitely broke out of the congestion that we had been facing on the daily. This is why I have my daily chart on the left, guys, and my intraday chart on the right. It's like reading a book. Start left, move to the right. I don't know how anybody else does it the opposite, unless you read Arabic or something and you're used to going from right to left. All right. I thought Zag was also an interesting trade.
Zag was a beautiful trade, and really that was the highest based on percentage gain. That actually was the highest, and that was a beautiful go pause go on the daily there.
Let's talk about what a go pause go is, everybody. Okay. Actually, is a go pause go. So a lot of times after you see a nice big green candle, the following day is like, okay, what just happened? Who won that war? It's a battle between the buyers and the sellers, and you wind up with a spinning top, kind of a little doji. And then the next day, use the low end of that doji and the high end of that doji. If we take out the high end of that doji, it's a continuation pattern. Some people call it thrust, pause, thrust. I don't like the way that sounds, so I call it go, pause, go. And so a go, pause, go was showing up nicely. Yeah, the stock was a little extended. I mean, one of the things that you might have in your mind on this one was, oh boy, here we just bought a breakout, had a nice green bar, but they start to get a little wily up here as they get extended. 1, 2, 3, 4, 5, 6 up days on a candle. We start to get a little bit into the musical chairs territory. When the music stops, is there going to be a chair to sit on? So, that would be the only downside on a chart like this. Ideally, breakouts like right here above congestion, well, that would be a candle I would trust. But as you start to get overextended and go, pause, go, and more candles, eventually the music's going to run out. And so just be aware of these extended type stocks as well. But yet another decent one there. This is an ADR. It's a foreign stock. That's why you see a lot of gaps and goes. But nonetheless, it was another decent trade today on Race, which I guess is Ferrari. And for those that don't realize, that's Ferrari. So Ferrari had a decent day. All right, so that's about it for Holly. These are the days I really like. One-sided directional bias. Took the time. It took 50 minutes, 55 minutes before the first trade was selected. All the trades were on the same side of the spectrum, no shorts. Not too many trades to choose from. A lot of them that we showed you were definitely breaking out on nice daily charts as well. So that's what we got for Holly today. Let's put that just back on blank open. And we're ready to move on to the next segment, which is Trade of the Week. So we've got a couple open trade of the weeks still, and let me just quickly verify which ones. So let's start with the one going back farthest that's still basically doing something, GDX. And this was triggered way back here at this blue line down here. So the entry from GDX basically went from down here, a little bit underwater, and then pushed up here real nice. Well, I just happen to know that up at the zenith here at this level, GDX was up over 10%. Now, for those of you who don't remember, Andy and I, we managed a account called the Ditto Trade account, which we were trading live money. We had our own account, and it was called the Traders account. And if anybody else opened up an account with Ditto Trade, which was also a broker-dealer, they had a dashboard that showed what trades we were thinking about getting in, we were in, and whatnot. And if they wanted to participate, they could checkbox it. Or they could just checkbox the thing that said, full throttle, 100%, I trust you guys with both entries and exits. Just trade my account for me. Okay, so there's a little bit of background on the Ditto Trade account. Well, the reason I bring that up is because one of the reasons we had success in that, and we did have success, we outperformed the S&Ps for 3.5 years running pretty handily. Once we got up 7, 8, 9%, 10%, it was time to start ringing the bell. not to be greedy. And so typically we might take off a third. Maybe we get up 8%, we take off a third. Maybe we get up over above 10%, we take off another third, and then just let that final third just do what it does. Maybe it even pulled all the way back to here. We didn't care. We'd keep it because it could very well bounce and move back higher in the coming weeks. But somebody asked me about GDX last week, and I pretty much had said, if you're concerned about the profits up here that you have, you probably don't want to see it close below this little hitch that we had a pullback and built a base on. Pulled down to it, touched it, closed above it, touched it, went below but closed above it, touched it again, but then we gapped down. So that in effect really was the line in the sand for people who were concerned that were up here wondering what they should do with any profits they had. But again, consider when these things start moving in your direction and get up 6, 7, 8%, it's time to start taking maybe a third off, and you'd be amazed how easy it makes it look. So you should be amazed at how easy it makes it feel for your emotions to not have to be nagging you. I should be selling this. I should be selling this. I should be getting out. I should be, it's just, you take a third off and it takes the anxiety away and you just kind of go back to a more Zen trader. So GDX is still intact. It's nowhere near its stop. Hopefully it's starting to do its thing. Typically when we go to look at sectors here in our next segment, we are going to see the GDX was starting to come alive towards the end of the day. So we'll come back to that. What's the next open trade? Oh, this is a good one. MU, and I got a lot to say about MU. First off, if we back up just a little bit, we see this level right here, right around 32.92. Well, in the original email, I said this level could find some resistance, and so let's just make our profit target around 33, just a round number of 33. So we've basically blown through 33, and again, at that level, would probably been a good idea to take off a third. Okay, and now we're moving even higher. We're up here above 36 today. We barely got above 36. What I can't show you on the trade ideas charts just yet because we don't have weekly, but I can show you on freestockcharts.com. This is getting interesting. All right, this is back in December 2014, 3 years ago. Big seller up here at 36.50, excuse me. So if we look at this bigger picture here, you guys can see what I'm talking about. Here was stop number 1, which was our profit target to try and take a little bit off. Blew through that as we would hope. Hopefully with still 2/3 of the shares intact. Well, now as we get close to this line, what we need to be thinking about is probably kicking another third and then letting that final third just work for as long as it works. But between the opening price and now, you got off 2/3. You got to sell it when you were able to, not when you were forced to or when you had to. Okay, so definitely want to just make that level of 36.50 aware for people who are still holding some Micron. What I typically like to do is not wait for 36.50 to show up. I like to start going on the offer at 36.40. And getting my price and having people trade through me, because once it does tick up through there, sometimes that's when the bids start to drop back off and then you don't have as many participants. So MU looking great, doing everything we would have hoped it would do. Last week was Twitter. Twitter actually moved up 4.2% to its highest zenith on this day right here. So we basically broke out from our green line, which is this line right here, had a day and a half or 2.5 days of nice movement up to the zenith right about here, and then we got a bit of a pullback. But the good news is the pullback seems to be digging right in pretty much around where we, for the most part, broke out of. We closed above today, back above our breakout. It seems like this 1750 level is probably going to be our line in the sand. So we could rethink this trade, all right? We triggered it. We got some movement. We got 3 days of movement. I would have loved to have had more, but what we have to decide to now is the stock just taking a breath. Is it 3 steps forward and 2 steps back? Is it going to take another big inhale here and build up bigger base camp and push higher? That's my hope. But since we've already triggered it and we've already got it in the right direction, this is probably where we want to maybe tighten up our stop a little bit. Our stop down here, because if it falls back down into this range, it's not doing what I expect it to do, and that's what we would call reduce risk in the Holly world. You know, when Holly gets out of a trade called reduced risk, basically just means the trade was working, but now it's not, and it's not really doing what we expected. So possibly if somebody's looking for maybe a tighter stop on this Twitter, you know, since it did break out and gave us 4% of upside, I don't want to see it drop back into that range, and I certainly would not want to see it drop back below these pivot levels right here that were prior resistance. I don't know. Would you agree with me on that, Andy?
Yeah, I definitely agree with you on that. It's just, I mean, there might be a chance, depending on how it goes tomorrow. Some of these stocks get really squirrely when it comes time for the FOMC, that it may, try to go down below that double wick bottom right there. And so I would definitely give myself a little bit of, if you want to keep it tight, give myself a little room. But
Right.
and then you also have kind of a trend going back about a month ago now, where it's making
Higher lows.
higher lows, right?
Mm-hmm. It's probably worth John's comment. I appreciate that comment, John, and I would be what's the word I'm looking for? I would be lying if I said that there's not a part of me in the back of my brain that's hoping for a buyout of Twitter. Amazon, Apple, Google, whoever, come one, come all. But he's saying here, news on Twitter, former Google executive, chief financial officer Patrick Pichette is joining the board of Twitter, and also PepsiCo CFO leaves to join them, as the PepsiCo guy leaves to join Microsoft. So, there's always in the back of my mind, John, thanks for reminding me that, and I would love to wake up one day and hear Amazon for Twitter at 25 or something like that. That'd be great. We would all be certainly happy about that, because this is the kind of stock that, trust me, the big guys are kicking tires on. They just haven't figured out how to unleash the power of this social media yet. And at some point, some company's going to say, we're going to take a chance. So let's hope that's the case. And again, let's hope that's the case, that yesterday and today we're basically just building on a higher low that we can use as a base camp to come back and assault this blue line again. And you can see I've got myself prepared, got that blue line tricked up again to alert me if Twitter goes to back to a new high. And last but not least was this week, what was it? Fred. Now, a couple things going into the weekend. Jamie, Andy, myself, we noticed there was a lot of retail stocks showing up on the trend change lubricant. And the trend change lubricant is typically the first go-to scan that we like to look for, because those can be stocks that might wind up in the long run like Weight Watchers. Weight Watchers at one time was a trend change lubricant, trust me. And there's a couple other great examples in there as well. So we were noticing that there was a lot of retail stocks getting ready to maybe try and turn and pop out of their base with the extra special secret sauce of having short float in a lot of these. And that's really the genesis and the basis behind the trend change lubricant. Look for an area that technically makes sense and where the short sellers will start to scream if they lose that technical pivot level. Well, right here we were close to lows, but Fred came out with surprised earnings and had a good earnings day and has been kind of slowly trending up ever since. And the actual alert looks like it was triggered from the green candle there, because green candle was Friday. So essentially we triggered, and I was watching the volumes closely. The volumes were great. They were relative volume at 2.0, 5-minute volume was in there 300-400. We had a nice couple of maybe an hour or so, and then kind of the reversal back into the range. Well, this is going to happen. So what we can do is just go on the data that we have today, which is, it seems like this 705 level is trying really hard to hold, and it's basically in between our breakout and our stop loss. So this brings up a good philosophical point about swing trading. One of the worst things I think you can get into is set a plan and then have a day like this show you a couple of percentage points up and then just fall right back into the range. And then you tell yourself, well, gosh, it didn't follow through. I'm just going to get out. I don't like the way it did that. Well, you have your right to do that, and you might be right. But when we set these position trades, we talk about our downside, we talk about our upside, and we say always at the end, only risk the amount of shares you are willing to lose if the price of Fred drops back down to 655. Kind of like when we go to Vegas, right, guys? We go to Vegas. All right, I got $200 that I can blow on the crap table or the blackjack table, and that's going to be it. Well, it's the same thing we're doing here. You've already resigned yourself that you're going to risk in an XYZ case trader down here might equal a $200 loss for him, and that might be the most he wants to take on any single given loss. So there's really no reason to jump ship and change your mind right here. We're smack right in the middle, and there's nothing that says, if we zoom out here in the 15-minute chart, look at how yesterday and today that 705 level was holding pretty good. So I'm just going to continue to stay with my original plan. I'm not going to fret and worry. Now, tomorrow, if we have a nuclear war and the Dow is down 500 points on the open and gapping and running quickly, all bets are off. Okay, you guys are on your own. I wouldn't blame you for trying to get out of something like that because the market backdrop has changed significantly. But in a market backdrop that we have here, where we're just slowly moving higher, there's no need to freak out just because it dropped back into the range. Our drop dead level is down here. So try not to get too concerned about, each day. And again, I said earlier, having an open mind is one of my favorite virtues. My other favorite virtue is having patience. I got real tired of changing my mind here because I had a bad lunch or was in a bad mood and this isn't working and was fighting with my girlfriend or whatever. Get out. Those are not the right decision-making processes. So Fred, we're just going to have to let work. Again, there's a good short float contingency in there, and if it wants to take out and move highs, then we'll take it. If not, we're just going to have to accept the risk and reward. In the case of the imaginary trader, he's risking 200 to make up over 500 with our profit target. So it all comes down to risk reward. You can have a 55% strategy, but if you're making 200, if you're losing 200 but making 500 on all your trades, you're going to be just fine with a 55% strategy. All right, well, we're getting a little low on time, so I quickly want to go through maybe some scans here on the, somebody want the trend change? Yeah, I'll give you that real quick before I quit.
And somebody earlier asked for the washout bounce,
I did send the washout bounce. The washout bounce is in, you were talking, so you didn't see it. So the washout bounce, TCL for trend change lubricant, and the code is now in the chat window for you guys that asked. All right. I don't think we're going to have time for personalized charts today, but we are going to have time to go through and maybe give ourselves chance favors that prepared mind for tomorrow. Let's take a look at some of these sector charts and see what we see. Solar leading the way today. Well, path of least resistance is still higher. Don't see a whole lot of negativity there. It might sideways action for a while and then maybe set some price alerts if we see a flag develop. But solar seems to be doing just fine. Financials, well, they're coming off a big oversold bounce. However, they're running right smack into this resistance right here. So I would keep an eye on that line right there in the financials around 25.30. The banks, nothing to really write home about local or national. They might be trying to break a little mini downtrend line here, but again, they've been bouncing off of oversold positions. Mm-hmm. They're probably going to run right smack. And look, the profit target for trade ideas, that blue level, makes perfect sense to me to put a level right there. Boom, 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 pivot level. So, these gradients are looking for pivot levels, and they can give us good ideas sometimes. Silver. With the strength of the market lately, gold and silver has fallen back, but silver tried to put in a nice kind of a candle washout yesterday and hold its own today. The GDX miners, again, a pretty big fall from grace. We looked at GDX earlier, but they're trying to hold those same types of levels, and maybe there'll be a higher low and we can dig in. So far, I haven't seen anything super compelling, until I come to this. This looks kind of interesting. This is XLK. Our cheat sheet says this is the technology select spiders. So tech. What does the Qs look like? Again, remember I put that line in here in the Qs as we're getting close. We're sideways. Well, the XLK, same thing. We might be in for a possible tech move. So tomorrow, if you guys start to see some tech moves, take a look at the Qs, take a look at XLK and see how they're doing. That might give us a little extra confidence in that particular sector. XLE Energy, probably not going to do anything until it gets back above this level. It's been beaten up really badly. Agriculture. Oh, that's interesting. I kind of lost track of that one, Andy. Jeez.
Yeah, I remember that has it's a really
That's right.
crazy.
Yeah.
Yeah, I
Some,
can't remember what. There's a couple of companies that make up just a huge
well,
portion of that. Yeah,
CF is obviously in there. It's looking pretty good. But
yeah.
well, this would be again, like I mentioned earlier, the extended version. So I probably wouldn't be jumping into the fifth candle after it left the train station. However, maybe, just maybe, we can come back here and set a price alert for a pullback and watch how the price deals with a possible pullback in the sector of agriculture. So I'll just set that and forget that. Pullback are my notes. And it may dig in right here. Like I said, prior resistance can become future support. So it's a possible trade. I definitely wouldn't buy it here, but I'm going to set it and forget it. And when it triggers, if it triggers, I'll evaluate it then. Semis, we know what those look like with MU once again. And again, with the MU running into some close resistance, semis put in kind of a nice hanging doji here. After 4 or 5 days of good run up, semis are probably due for a pullback and maybe even a gap fill. I don't know if I would venture to guess where, but the semis are probably going to run out of steam. Gold miners, we did those. Gold, same thing as silver and gold miners. They're just trying to hopefully recoup, build a new higher base camp here, and maybe build higher from there. Dow, we looked at that. Path of least resistance is certainly up. Qs, we talked about that, waiting for a possible breakout. So far, Andy, all I'm seeing is possible technology. Spiders are such a diverse group. There's not really much we can gather from that because there's too many components in there. IWM, we talked about that. If IWM wants to go sideways and flag for 3 or 4 days and then break out and trigger my alert, what am I going to be looking for? Low cap stocks under $5 and $10. OIHs, well, they've had a pretty big dip off their bottom, pretty good V bottom. They're probably going to go sideways for a while, but I'm not seeing a whole lot. They're still pretty much in their downtrend. Oil, the actual commodity, this looks like the level it needs to get above, so just a lot of sideways action. Now we're getting into kind of the stuff for the day that is getting weak. Well, China's had a good run, but China's starting to probably sell off. I'd stay away from China. Steel, yeah, this could be one big giant flag at some point. It's trying to do something, but I probably wouldn't be interested until steel maybe got back above that line right there. Treasuries, not much to deduce from treasuries. Home builders, interesting. They did break out, but looked at a nasty pullback, but they're pulling back to this line that I've had in here for a while, so they could be trying to set up for a possible base camp. That could be worthy to watch. So technology and maybe home builders building a base camp. Healthcare, pulling back. But look at what our trade ideas technology is telling us. Smart stop just happens to coincide with kind of where the breakout was. So you could maybe even set a price alert for healthcare XLV and see how it behaves if it comes back here and if it becomes a pivot point. Biotechs, looking like they're rolling back over. They couldn't break through. They had every chance to break through that still active blue alert, but they look like they're getting tired after a big run. Not seeing much there. UNG, I'm never interested in. IYR, kind of sloppy, not seeing much there. And XRT is our retail. So let's hope retail kind of hangs on here for Fred's sake. But after going through here, I see 2 takeaways. I see technology, the XLK. All right, this thing looks like it's just looking for a reason to try and break out, and similar to the Qs, which are also technologically heavily weighted. So possible technology move tomorrow, we'll see. And what was the other one? Healthcare, I said. It's home builders. Home builders have already pulled back and are establishing possible base camp here at this level. So maybe keep an eye on home builders if they wanted to try and move higher. With the FOMC coming out tomorrow, who knows? Bill asking for the sector ETF list. I can pop it into the chat window, but here's the problem. You're going to have to run a symbol list. And I will go ahead and type in sector, and I'm going to do paste. So the sector alert is in there now, but what you guys have got to do is you've got to figure out how to go in there and configure it and point it towards the ETF list that I have. I have a list of about 28 ETFs, and if you see on the symbol list here, ETF is enabled, and so we are only following the following list, which is the ones that we just went through. So the easiest way to get those list of ETFs is to build them yourself, or
Well,
if you want,
Steve,
yeah.
it is. Remember on our PDF page, I did list those at the bottom. If you go down the bottom, you'll find the sector analysis, and I do have a list of all those ETFs. So if you will send an email to info@trade-ideas.com, we will send you that PDF, so you'll have those symbols on there as well.
Right. And real quick, what you're going to want to do is start at Tools, Symbol List, Create New List, and for no confusion, just please title it ETF. Once you launch it, you're going to have a blank window, but my window's not blank. These are the ETFs that will be dropping in there. So once you've set up the ETF list, you can go ahead and point that towards the sector list by going into the sector list, configure, and symbol list ETF. Ideally, you're going to find it here in this window first. It'll be ETF. Once you highlight it, it'll be available over here, so you can check it and assign that list towards only those 28 ETFs. All right, so that's going to be the best way to handle that request. All right, guys. Neil's got some ETFs in there. Good. You're welcome to use whatever ETFs you want, for sure. We will end on one chart. EXTR, says John, looks good for tomorrow. Let's see what John is seeing. EXTR looks good for tomorrow if it hits 1194.
Mm-hmm.
So yeah, I mean we've got the way I like to mark this up and explain it. It's like the old battering ram trying to knock down the moat and the gate on the other side of the moat. They come through and they push and they got rejected and they pull back. Now have a hot meal, have a hot shower, grab the log, try it again, push again. So when they keep knocking on these levels, if they finally do make it through after making higher lows, there could be something there. So yeah, I agree with you there, John. Not bad. All right, guys. Thank you for everything. I'm going to have to close out the week slideshow here, but again, info@trade-ideas is the best place to come if you're looking for something. What am I looking for? Here I am. Back to our slideshow. Okay. Podcast every Friday. We're pretty confirmed we're going to have Brian Shannon this Friday. He was supposed to be here last Friday, but Alpha Trends Brian Shannon is our guest speaker at the Trade Ideas Search for the Holy Grail Summit coming up on October 1st. If you want to get the Trade Ideas podcast, just go to your favorite podcast library or just do a Google search for Trade Ideas podcast. It'll point you in the right direction. The two different premium and standard, really, they're one and the same. You get all the scanners with the standard, but what you're missing with premium is the AI, you're missing the back testing, and you're missing those price alerts I showed you guys earlier, my big tall price alert screen with the triggereds and the non-triggereds. But if you want to take a choice on either one of these, capitalized, AI powered, all caps is your promo code at checkout. That'll give you 15% off either your first month or your first year of both premium or standard. So keep that in mind, AI powered. And don't forget, you get that 1 hour of free one-on-one session, just you and us, so we can focus only on what your needs are. And trust me, it's a crash course and you'll get a lot of information. Going forward, any questions? Always info@tradeIdeas.com is the best place to start. If you want to direct mail me, Steve at Trade-Ideas, Andy is Andy at Trade-Ideas. Myself, I'm on Twitter at TodayTrader. Dan, the CEO, is at TradeIdeas1. We do have a phone number down here, but please don't expect it to be monitored by a live person. Typically, it's a voicemail, and we'll return the call, but try and keep your inquisitions to this phone number related to accounting issues only, because it's the accounting department that monitors that. If you've got a request and you need something, well, you can go to the live room with Barry. You can come into the live chat, which is at the bottom right of our trade-ideas.com website, and we're all there monitoring that as well. So thank you all for the feedback. Thank you, Andy, for the help. And if you guys have any questions, info@trade-ideas.com. And if you want more information on the end of month Carlsbad Trade Ideas Summit 2017, looking for the Holy Grail. We're really excited to meet some people that are just names to us and meet face to face. It's a 2-day event, but Sunday really is the main event, October 1st. So if you want more information on that as well, info@trade-ideas.com. Or I am tweeting constantly links for the live feed. If you can't fly out and get a hotel and make it, we are going to have a live feed for that as well. So keep an eye out. You'll be hearing a lot more in the next 2 weeks about that event. Great. We'll see you there, John. Thanks, David. Thanks, Bill. Thanks, Mike. CY, Neil, Stuart, everybody. We will see you next time. Tomorrow's webinar, as far as I know, is on schedule for 5 p.m. Eastern with Dan and Brad. And we'll see you all then. All right. Thanks, Andy.
All right. Thank you. Thanks, everybody. We'll see you later.